The South Korean economy is extremely successful and advanced. Massive family-run conglomerates like Samsung and Hyundai have become leaders in semiconductors, electronics, and heavy industry, contributing significantly to the country's impressive growth over the last half-century. Daewoo Group, one of the largest of these conglomerates, was involved in everything from automobiles to shipbuilding to consumer electronics. In the 1990s, Daewoo overtook Hyundai as the largest company in South Korea, with annual revenues of $80 billion and over 300,000 employees. It's no exaggeration to say that Daewoo played a crucial role in transforming South Korea into the global economic powerhouse that it is today. Its expansion, however, rested on the foundations of excessive use of debt funding and shady bookkeeping. Welcome back to Financial Fortune. In this video, we'll be discussing the recent $50 billion fraud scandal involving the Daewoo Group in Korea. This story has sent shockwaves through the global financial community, and we're here to break down the details and offer our insights into what this could mean for investors and the economy. The dominoes were all knocked down in 1999. Kim Loo-chung, the company's founder, was eventually convicted of orchestrating the largest corporate fraud in history after the company collapsed, under the weight of more than $50 billion in debt. Tens of thousands of direct and indirect workers lost their jobs as a result of the economic fallout. It also prompted many to wonder if outsiders were to blame for the undue political influence of family-run businesses. In 2021, 20 years after Samsung's $8 billion bribery scandal, the country is still struggling with the same problems. Daewoo's meteoric ascent. Daewoo was established in 1967 by Kim Loo-chung as a textile export business. South Korea was in a deep economic depression at the time. South Korea's economy was primarily focused on agriculture, so the country was poorer than its northern neighbors on a per capita basis. This was because North Korea had a greater endowment of natural resources and a generous economic existence from the Soviet Union in China. The textile industry, which relied heavily on the country's large population of unskilled, low-paid workers, was the mainstay of the underdeveloped industrial base. Economists at the time were generally pessimistic about the country's future. As a result of the dire economic conditions and the ineffectiveness of the government, an ambitious army colonel named Park Chung-hee was able to stage a coup in 1963 and become the country's military dictator. Park's primary objective was to transform Korea's economy from a traditional one based on farming and textiles into a modern one driven by science, technology, and industry. The country's adoption of a liberal free market economic model following the end of the Korean War was obviously not producing the desired results. He believed that private sector competition was counterproductive, and that companies lacked the foresight to invest in the strategic industries that would fuel industrialization. Park presented a set of economic plans over the course of 5 years as a response to these pressures. Many people associate Stalin's 1930s Soviet Union industrialization efforts with the birth of the five-year plan concept. Park's goals were similar to Stalin's, but he approached them in very different ways. Instead of concentrating government authority in one place, Park used a fascist economic model in which the state set development targets and used incentives and punishments to coerce private businesses into meeting those targets. Daewoo's transformation from a small textile exporter into an industrial powerhouse was guided by these five-year plans. The central goal of Park's five-year plans was to establish Korea as an export-focused economy and subsidize the development of heavy industry. According to Park, a totally free market system couldn't handle it. The chicken or egg dilemma is a common ill in industrialization. Let's say you're interested in growing the auto sector. You'll need steel and other components, but there aren't enough end users in the market to justify investing in a steel-making infrastructure. For most business owners, the prospect of sinking tens of millions of dollars into a steel plant on the off chance that a car industry will emerge to buy its product is too great a gamble. Park proposed simultaneously constructing all the industries essential to a prosperous export economy. As a result, he extended an offer to the heads of the country's largest family-run businesses. They would all work in sectors that Park believed were crucial to Korea's economic growth. In exchange, the government would offer them low-interest loans, tax breaks, and high tariffs to keep out foreign rivals. The companies benefited greatly from this agreement. De facto monopoly status could be attained if they agreed to enter the assigned industries. Since they would be able to undercut any future competitors thanks to government subsidies, they are almost guaranteed to take over the market. The government facilitated the purchase of Daewoo by Hankook Machinery, a train car and diesel engine manufacturer, as part of the second five-year plan. Hankook had been losing money for years and was on the verge of bankruptcy when, with the help of subsidized loans and lucrative government contracts, we were able to turn the company around and make a profit. Daewoo Heavy Industries was founded after the company successfully acquired Hankook, and it subsequently expanded through a series of acquisitions. The government provided funding for many of their acquisitions. Originally an exporter of textiles, by the 1970s they had become an industrial powerhouse, producing train cars, machine tools, and other heavy machinery. Daewoo quickly earned a reputation for its ability to rescue financially struggling businesses through acquisition. Because of their stellar reputation, the government persuaded them to purchase a cargo shipbuilding firm that was on the verge of collapse. The shipbuilding industry is notoriously challenging to navigate. It is technically difficult and expensive to construct a 50,000-ton ship on time. Shipping companies typically place orders for such vessels at predetermined, renegotiated prices. However, if cargo rates drop before you finish the ship, your client may go bankrupt. Because of this, the shipyard is forced to scramble at the worst possible time to find a new buyer, which is financially untenable. Park's plan to transform South Korea's economy into an export powerhouse relied critically on the success of his gamble to construct an armada of cargo ships. Therefore, he pushed Daewoo to complete the purchase. Like many of Daewoo's other acquisitions, the automobile manufacturer Saihin Motor was mismanaged and struggling financially when Daewoo bought it in 1978. This was arguably Daewoo's most important decision. They changed the name to Daewoo Motors, brought in new management, and by the mid-1990s, annual sales had reached 700,000 vehicles. At this time, David had a global workforce of over 300,000 people and annual revenue of $80 billion, making it the second largest company in South Korea. Among their many divisions and subsidiaries was an investment bank called Daewoo Securities, as well as factories producing heavy machinery scenery, cargo ships, and electronic devices. But their automobile division was the company's shining star and primary concern. They produced automobiles in great numbers and sold them at low prices. Because of this, they became quite fashionable in many emerging economies of Asia, Eastern Europe, and Latin America. Kim Woo-chung, founder and chairman of Daewoo, is a legendary figure in Korean and international business circles. U.S. business magazine Fortune profiled him. Over 2 million copies of his autobiography, Every Street is Paved with Gold, were sold around the world. Daewoo Group appeared to be unstoppable, attracting graduates from the best universities in Korea. Fraud and debt. However, Daewoo's business empire was actually a house of cards supported by a complex and well-planned system of accounting fraud, despite appearances to the contrary. While greed and corporate fraud are global phenomena, the severe consequences that followed Daewoo's collapse in Korea can be attributed in large part to the peculiarities of the Korean economic system. To begin, Daewoo was enormous, with annual sales that were equivalent to 10% of South Korea's GDP. This revenue was largely produced outside of the country, and revenue cannot be compared directly to GDP. In spite of this, the conglomerate was structurally significant to the South Korean economy, as it employed over 100,000 people directly in South Korea and hundreds of thousands more indirectly through their contractors and suppliers. Keep in mind that time? In the 1990s, we went on a buying spree that shaped our company. They had more than 500 international branches, specializing in everything from shipbuilding to electronics production. The vast network of subsidiaries lent to, borrowed from, and acquired assets from one another. Because of the company's convoluted organizational structure, it was nearly impossible for outsiders to grasp the conglomerate's overall financial health. The government actively encouraged multinational corporations like Daewoo to borrow large sums of money in the 1970s and 1980s so that they could expand as quickly as possible. They helped make this possible by convincing banks to extend subsidized loans to those in need. Korean conglomerates were able to borrow substantial amounts of money from both domestic and international banks, on terms that favored the borrowers. There was a widespread belief that Daewoo's conglomerates were too large to fail because of their societal significance. This theory was proven correct when their shipbuilding business began losing money alongside the worldwide shipping industry in the 1980s. With abundant and low-cost funding from both domestic and international banks, the government effectively bailed them out with a $600 million subsidized loan. The debt-to-equity ratios of all the major Korean industrial conglomerates were well over 500%. Kim Woo-chung's aspirations could not be fulfilled by a leverage ratio of 500. To get ahead of the competition, quickly expand his business, and borrow more money, he committed accounting fraud. The debt-to-equity ratio is one of the primary indicators considered by lenders when deciding whether to extend credit. Debt per share is the total debt divided by the number of shareholders, the owners of stock. Equity can be calculated by subtracting assets from liabilities. You can improve your debt-to-assets ratio by doing one of two things: reducing your debt or increasing your assets value. Daewoo committed both through fraudulent accounting. They issued debt without actually labeling it as such, which helped reduce their reported debt levels. This would be accomplished by issuing overpriced shares of stock to foreign investors. They'd make a pact to repurchase the stock at a later date, but at a higher price. In other words, the contractual repurchase price acted as interest, making the equity shares essentially the same as debt. They would have their subsidiaries purchase assets at inflated prices from other subsidiaries. Let's pretend for a moment that their shipyard arm spends $10 million on an office complex. For the exorbitant sum of $20 million, their auto division can purchase the structure. The $20 million in cash is now an asset for the shipbuilding division. The auto division is the proud owner of a $20 million office building, purchased at cost. This deal doubles the group's valuation of the office building from $10 million to $20 million. As a result, their wealth has magically increased by $10 million. Furthermore, this permits them to cross-subsidize, whereby the most successful subsidiaries provide financial support to the less successful ones. Kim Woo-chung's ability to buy struggling businesses and turn them around so that they become profitable made him a legend in the business world. Kim, however, wasn't quite the businessman he presented himself to be. Many of the businesses they bought kept losing money after they bought them. These sham asset sales are just a way to make it look like they're making money. The tumbling. According to Warren Buffett, you don't know who is swimming nude in Korea until the tide goes out. In 1997, the ocean level dropped. Trade liberalization and increased international trade contributed to the rapid development of many Asian economies. In the 1990s, foreign investors have been buying shares of Asian companies at a rapid clip in an effort to profit from the region's rapid economic expansion. South Korea benefited greatly from this, and stock prices on the Korean Stock Exchange rose sharply as a result. The result was a massive financial bubble that burst in 1997, ushering in the first stages of what became known as the Asian financial crisis. The bubble quickly deflated after foreign investors began fleeing the region. From its high point in 1995 to its low point in 1997, the South Korean Kospi stock market index fell by 70. Investors from other countries exchanged their Korean won for their home currencies as they sold shares. As a result, the value of the won dropped by more than half in a matter of months, from 901 won per US dollar to more than 9,800 won per US dollar. The central bank's foreign currency reserves were nearly depleted, and a sovereign default by the government was imminent. They were compelled to agree to the Air National Monetary Fund bailout terms in order to secure financing. In an effort to prop up their collapsing currency, the IMF pressured the Korean Central Bank to increase interest rates to 30%. Because of the devastating effects of the 30% interest rate on the economy, many businesses reduced expenses, let go of employees, and sold off assets to reduce their debt load. But Kim did the exact opposite. The market crash presented him with a once-in-a-lifetime opportunity, so he made even more acquisitions. For instance, at the height of the crisis, they borrowed over $2 billion to acquire SsangYong Motor, a rival Korean automaker. In fact, between 1997 and 1999, they bought 14 other businesses in an effort to boost their flagging sales. They spent significantly more on advertising, but in a time when consumers were cutting back, their efforts were fruitless. Daewoo had a significant amount of debt in foreign currencies. Since the value of the won has decreased, the value of these debts has increased by a factor of 2. They had to refinance a lot of their domestic debt at interest rates as high as 20% because of the IMF bailout. And yet, no matter how dire things got, they still refused to implement serious cost cuts or sell off any of their holdings. Daewoo was like a gambler who keeps doubling down in the hopes of winning back their money that they've already lost. They had borrowed as much money as they could get their hands on in an effort to buy time until the economy improved, but the clock had other plans. Time was short and running out. It was all over by November of 1999. They had run out of money due to rising interest costs. They had accumulated $50 billion in debt but had only $2.50 billion in shareholders' equity. This gave them a leverage ratio of 2,000%. Kim made frantic efforts to secure a bailout from the government, but the government was in a precarious financial position and was under close scrutiny from the IMF. It was impossible to offer a bailout. Thousands of Daewoo workers lost their jobs overnight as Kim's once proud business empire crumbled. All the accounting fraud was uncovered after the collapse as well. Kim escaped to Vietnam for a while, but eventually he returned to South Korea, where he confessed to the largest accounting fraud in the country's history. After he was given an 8-year prison term, Foreign declared bankruptcy. Consequences and repercussions. The majority of its affiliates ceased operations, while the creditors acquired control of the remaining few. In 2010, Daewoo Engineering and Construction, which is still in business today, constructed the Yoga Bridge, the first major South Korean bridge to feature an express bus lane, at a length of 1.4 kilometers. As a result, buses can avoid traffic jams and travel at higher speeds, making them a more convenient and time-saving option for commuters. Also still in business as of this writing is Daewoo Electronics. Although at this point they only make electrical components for cars and have ceased production of consumer electronics altogether, the government facilitated the 2017 purchase of a controlling interest in Daewoo's shipbuilding business by the Hyundai Group. The Korean stock exchange played it again. Despite its erratic profitability, it continues to be one of the world's largest shipbuilders. The Daewoo Group's automobile manufacturing division, the company's crown jewel, was sold to General Motors. The Daewoo brand was eventually discontinued, and its former assembly lines are now used to produce the Relay brand of automobiles. Therefore, while the Daewoo Group does still exist today, it is a mere shell of its former self. The Daewoo Group's demise highlighted the vulnerabilities of South Korea's model of economic development, which is heavily dependent on family-run industrial conglomerates. Kim Woo-Chu was the mastermind behind the Daewoo Group, and his longtime associates made up the entire board. Some of them even went back to high school with him. No one dared to stand up to the boss, so everyone went along with his accounting fraud schemes. Daewoo was able to cross-subsidize economically inefficient and likely should have been shut down long ago money-losing businesses, because it was a conglomerate. Because of the widespread belief that Daewoo was too large to fail, financial institutions and other investors kept pouring money into the company despite its murky financial health. During the 16 years that President Park Chung-hee was in office, this allowed them to balloon to much greater sizes than they would have otherwise. Mr. President, the miraculous tripling of South Korea's GDP is beyond description. The country's industrial conglomerates, of which Daewoo was the most prominent example, were crucial to his success. Consider Park's 5-year plans, the performance-enhancing drugs of the business world. They allow for rapid advancement, but have catastrophic consequences if used for too long. President Park's 5-year plans had Daewoo as an unintended consequence. Yes, Chairman Kim Woo-chun committed a massive fraud, and if he had been more careful with leverage, the company might still be around today. But if not Daewoo, then some other multinational corporation. Inefficiency and fraud are inevitable when family-run businesses grow large enough and receive enough government subsidies. In the wake of Daewoo's demise, the South Korean government enacted a number of reforms with the goal of improving corporate governance. These included the introduction of stricter auditing standards for financial statements and the requirement that all major corporations have independent board members. Despite these efforts, family-run industrial conglomerates continue to dominate South Korea's economy. These conglomerates often have opaque ownership and financial structures. Another blow was dealt to the country in 2021, when the heir to the Samsung family was convicted in a bribery scandal involving $8 billion. The difficulties of corporate governance in South Korea are highlighted by this case. Thanks for tuning in to our coverage of the Daewoo Group fraud scandal. As always, we'll continue to keep you up to date on the latest developments in the world of finance and investing. If you found this video informative, don't forget to give us a thumbs up and hit that subscribe button for more insights and analysis from Financial Fortune.